Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, March 11th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Good to be back with you all here. Taking a look at the ES, just strictly based on price right now. The key range that we've continued to watch here is this impulsive sell-off that we've seen here over that 8-day span. This range right here gave us a nice key range here. From that high to that low, the midpoint of which right here is 44.76, and that's the level that we've been continuing to watch. Ever since that strong low, we knew we could get some sort of reactionary bounce. On this strong low, lower low at the key range low, we knew we could get some sort of reactionary bounce, although we fell short of the midpoint. Again, that continues to demonstrate how the market remains weak, especially in the face of the increasing war in Ukraine. So again, lower highs here, lower lows. This recent time here, we closed below the key range low, and that set up a great bear trap opportunity whereby price pushed back above the key range low the next day through the previous midpoint and closed strong. And then you can see the retest held in the previous session, and right now we're still hanging at these highs. So if you just look at it from that structure of the key range right now, bulls are continuing to defend the key range low and continuing to see responsive buying below those levels, although the downtrend remains intact, and we still could see new lows ahead until proven otherwise. There's not much that can be a catalyst right now for tremendous strength other than new or fresh lows. So again, we could still see a push into the 4,000 level, which could provide a great opportunity to again see a short-term reversal. But until we really get more resolution or some sort of bullish catalyst, we're not really going to see a whole lot of upside at the moment, although the short-term rotations can be there. Let's take a look here at the NQ. The NQ here continues to see similar price action to the ES against this key range low. The key range low here, key range high there, the midpoint here, and again, very strong lower low rejection here, but fell shy of that midpoint yet again. The downtrend remains intact, and we are continuing to see an attempted defense of prices at or below that key range low. Again, bulls are active here on new lows or fresh lows or below that key range low, although the downtrend remains intact, and we continue to see lower value relationships here develop with a downward trend. So again, much like the ES, the things that are getting this thing to bounce are new lows, fresh lows, things of that nature. So if we were to see another push downward, the 12.2 level could provide an opportunity there to see a bounce of some magnitude, but getting a longer term bounce right now seems at least out of the picture at the moment until we get a bit more clarity or some sort of catalyst, as we mentioned. All right, let's take a look at crude oil. Now, this is incredible here. Again, this continues to demonstrate when you get into certain market types, you have to really stay away from one side or stay away at all, because this is an incredibly bullish market. The already inflationary environment we knew would be bullish for commodities, including crude oil, and then the increasing tensions, as we mentioned, including the breakthrough market structure, all the various things we use to kind of calculate how far we could go. In our monthly market outlook for March 1st, we mentioned that the break right now through that 96 opens up the 113s, and then beyond that opens up the 145 to 150 zone. So March 1st, we mentioned that we could be headed to 145 to 150 with everything we have going on right now. And you can see, again, a high of 130.5, but tremendous volatility. Right now, I don't believe I've ever seen levels this high on this PivotBoss Advanced ADR indicator, but this is 13.73 points of average range on a 5-day basis. 13.73 points, 10.78 points on a 10-day basis. That is tremendous volatility, so you must be careful or stay away in this environment. But again, just from a short-term perspective right now, obviously pulling back a hair, but the market structure is what to watch. 105, 106 here, a failure to hold that, and we could go back to 96s and remain 96 to 106, and then perhaps trade in the next 10 increment above that and beyond that. So right now, 106 to 105 here, very important short-term support. Let's take a look at Bitcoin. Bitcoin right here, holding the 38,000 level, chopping around the 40,000 level, and you can see this, you know, compared to the ES, compared to the NQ, Bitcoin has had higher lows and has maintained market structure between the 34 to 42 zone, 45 zone. So it has maintained. It hasn't seen new lows. It hasn't had overly bearish swings, and instead it's seen more as perhaps in an accumulation type of phase at the moment, at least from this short-term perspective from the beginning of the year. Not the tremendous downtrends we're seeing across the other indexes, including the YM and RTY. So right now, mostly range bound, strong lows, and chopping around the 40,000 level. Again, overall, we could still see another rotation down, but this reminds me very much of last year, where the lows came in, it developed a range, and that was it before it rallied to new highs. This might be about what we get, very similar to here. You know, coming down here to 28 may still happen, but it doesn't appear as this market wants to let that happen. Bullish forces are keeping it in the range and keeping these lower areas below 35 heavily bid. So this could be very good. You know, it could continue to build out here, but at some point we might be done closer to the bottom and headed back up the range, as crazy as that may seem. If we take a look here at ETH, and you look at Ethereum here, again, Ether futures, and compare this to, for example, the NASDAQ, which has been in a very bearish downtrend here. This one dropped initially and is held inside the range, still holding the key range low at the moment, and has never tested it. Again, just from a medium-term perspective here from the beginning of the year, kind of compressing into what looks like a triangle. And that triangle, again, gives us this back end, right? That impulsive sell-off, and that's the key range to continue to watch. So if price were to drop below that key range low, the best opportunity to buy would be right there, including into that 1850 zone. And ultimately, a 100% target would take you up to 46.69. So right now, that impulsive move down, that key range we've seen here, very, very powerful and continues to maintain significance. We'll continue to watch that there, and the high probability buy zone down below. If it were to be hit, again, it could be hard to pass up buying in that zone. All right, that is it for now. We'll see how this plays out heading into the weekend. Today is rollover day for equity futures, so keep that in mind. Also, have a fantastic Friday. Glad to be back with you all, and I'll see you in the trading room. Take care.